Where is the housing market going next? Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial. In this Econ Market Minute, we're going to talk about housing. So first, housing plummeted in July, but days on the market actually got shorter. So what gives? Well, in July, existing home sales declined over 20% from a year ago to an annualized rate of 4.81%. And outside of the onset of the pandemic, the decline got back to a level reached in the late 2015 era. And so clearly, this was when the real estate market was recovering from the great financial crisis. What's amazing, though, to me, is that days on the market actually were shorter than a year ago, when rates were much lower and the housing market was more in a frenzy. So in July, homes were on the market for 14 days, 3 days than a year ago, and 82% of homes were on the market for less than a month. To me, that's encouraging. What's amazing to me is that first-time buyers make up roughly 30% of total purchases in July. That stat has not really changed much yet. And I think this is where we can pay special attention, see where this will go, where would-be first-time home buyers do, what they end up doing the latter half of this year. So second, although the rate of sales is slowing dramatically, the market is still short on supply of homes. And at this current sales rate, it would take only 3 months to clear inventory. So as supply remains tight, homes are selling quickly and still at fairly elevated prices. So people typically think that anything below 5 or 6 months supply is considered below average. So at this rate of 3, we're still a fairly tight housing market. And in July, housing market slowed, prices slowed. Median price for a single family home was $410,000 and some change, a decline of roughly $10,000 from June. And clearly, this is just barely budging. Overall, what this tells me is that home builders across the country have failed to build enough houses to keep up with demand. Third, the great reshuffle continues, which means regional variations abound, actually, in both the soft survey data and in this hard data that I'm showing here in this graph with existing home sales. And sales of existing homes in the West were hit hard in July. So again, outside of the pandemic of 2020, the rate of sales were similar to 2007 and 2008, which means that was during the time when the economy was in the depths of a housing crisis. A fun stat I like to look at is all cash deals. These all cash deals include investors, but according to the National Association of Realtors, investors made up only 14% of total purchases. So I think we could infer that some cash deals are likely homeowners selling in a high-priced region and moving to a lower-priced region. So my takeaway, the great reshuffle continues. Households continue to adjust to the hybrid work environment and looking for more square footage for that home office. So that's all we have for now. Take care and continue to follow us on social media.